Hi, when we talk about no money down, the lenders will require some form of down payment with their loan products. So it could be a VA loan that has 0% down, an FHA loan, you're looking at 3.5%. Some lenders require 5%, maybe even 20% down. But you would also have some form of out-of-pocket expenses. So we're going to look at, if you were looking at a property at $100,000, typically your earnest money is 1% of your purchase price. So the earnest money on $100,000 is $1,000. Then once you have paid your earnest money, the next step is to have your home inspection. And then with your home inspection, that's probably going to range anywhere from $450 to maybe $600. Then once you complete that, you'll meet with your lender, and then there's an application fee. That is approximately $400. Once all of this is done, then you'll have to pay your homeowner's insurance. That can range anywhere from $800 to $1,200. So as you can see, your out-of-pocket expenses can be anywhere between $2,600 or more that you would actually need. So even though they say that the loan product is 0% down, your earnest money is part of your down payment. So that is coming from your 0% or your 3% or your 5%. Then you have your other expenses like your homeowner's insurance, your home inspection, your application fee. Those are funds that you would actually have to show in your account once you start the mortgage process.
And so with that then, does any grants help cover this?
Grants come at the end, and those grants are first come, first served. So a lot of times, these are funds that you would have to pay out of pocket up front, and then the grants will come thereafter. So sometimes they will take those grants and they will say, yes, if they already applied $450 or they already applied the application fee, the $400. And then from that, there's other closing costs that the lender will charge. So those fees is what the additional closing costs will go for. So kind of remember that your closing cost is 2.4% of your loan amount. And then again, if that's an average. So you're looking at, does that $2,600, does that cover all of your closing costs? If not, these are funds that you've brought to the table, and then the grants will help with the remaining balance.
So even though that might be a zero down payment, you still have to come with something. So that's what we mean by no money down. It's not really a thing. You still need to have some funds available. You still be saving in order to achieve home ownership.
And keep in mind that we're looking at $100,000. So if the purchase price is greater than that, then all of these numbers are going to change to reflect that number as well. So it's good to have your savings and to keep building on that, because again, grants are first come, first served, and you really shouldn't solely rely on those grants being available.
Absolutely. So hopefully this helps break down what some of those hidden costs might be, or not really even hidden, but some of the costs that might be there just for you when you go buy a home. So don't be fooled by the no money down. You need to have some money with you.